Hi there, welcome to Nepi Invest. I hadn't originally planned on doing a video for Babylon Pump and Power, focusing on their September quarter Appendix 4C. And some of the reasons why I wasn't planning on doing that simply because this is not the sort of company I probably am interested in taking their position right now. However, I've changed my opinion because I think maybe this company should be rewarded by me doing a video on them because they were operating cash flow and free cash flow positive for the September quarter. Not only that, the share price has been struggling. In fact, the share price is near all-time lows. And when I say all-time lows, we're only talking about 5 years because this company was actually established in 2017 and then listed on the ASX just after it was founded. But the share price is struggling. The shares on issue have absolutely exploded over the past 5 years. So there's a lot of skepticism within the investing community around this company. So if they can maintain the momentum in the September quarter, in the next few quarters, this company would be looking more interesting. Now, this is not the first time I have done a video on this company. I did another video on Babylon Pump and Power maybe about 6 months ago, but I thought I'd do a little bit of an update for this company, focusing on their September quarter. Babylon Pump and Power is, or they provide a specialized equipment rental, operators and technicians, repair and maintenance of customer equipment, focusing or primarily focusing on large diesel engines within the oil and gas and mining sectors. So I refer to this company as a specialist resources services company. You could describe this company maybe as a mining services company. Company was founded in February 2017. Didn't take long for this company to list. November 2017 via IM Medical. So this was a backdoor listing. So from about 2014 to 2017, there was a lot of backdoor listings on the ASX. I'm not sure the reasons behind that, but I can understand why a small company would rather get on the ASX through backdoor channels instead of going through the whole IPO process. Now, the co-founder, NEC, is Michael Shelby. Now, the markup at 0.6 cents. Yeah, share price of this company is floundering, less than 1 cent. But at 0.6 cents, this company has a markup of only $15 million. Now, last time I did a video on this company, the markup might have been a little bit lower than that. Yeah, the share price was something like 1.5 cents. And the reason behind that is because this company did do a pretty big capital raising and the shares on issue more than doubled. So right now, the shares on issue for this company is at 2.5 billion. And that is a significant red flag for me. I don't like companies having a lot of shares on issue, particularly if the share price is below 1 cent, because what you do get is a lot of pip traders. So what they want to do is to buy and sell this company with only a 0.1 cent rise or fall in the share price. For instance, the other day, share price of Babylon went from 0.5 cents to 0.6 cents, and that was a 20% rise in the share price on 1 pip. So that's what is happening with this company right now. So ideally and preferably, this company should do a share consolidation, decrease the shares on issue to say 250 million. And if they decrease it to 250 million, which is a 10 to 1 or 10 for 1 consolidation, share price would go up to 6 cents. Now, when they did list on the ASX, they only had about 372 million shares on issue. So you can just see how the shares on issue for this company have increased by something, above 6-fold increase in shares on issue, because this company has undergone quite a few capital raisings over the past 5 years. A few of those capital raisings are because of acquisitions, but I want this company to be able to show me that they can grow organically and not grow through acquisitions. And the ticker for Babylon Pump and Power is, naturally enough, BPP. So I've already mentioned they did do a fairly significant capital raising. I think this was in June or somewhere around there. Now, before this capital raising, there were 1.15 million shares on issue with 141.8 million performance rights. And this particular capital raising, there was a placement, 172.7 million shares in that placement. And then there was also an offer, and there was 1.1 billion shares on that offer. So the shares on issue actually increased from 1.15 billion to 2.38 billion. So the shares on issue more than doubled in this particular capital raising. And that is a concerning thing moving forward for this company, is if they need more capital in the future, there will be a high dilutive effect for current shareholders. Now, before we have a look at the Appendix 4C for Babylon in the September quarter, let's just have a look at the financial year 23 results for this company, just focusing on the cash flow. This is the main thing I am honing on these sort of companies. I want to know that this company isn't going to be running out of cash soon. Now, there was a nice increase in cash receipts from last year to this year, increasing from 20.5 million to almost 30 million. And the company went from being operating cash flow negative by 5.8 million to being operating cash flow positive by 268,000. Now, the other thing I'm not really liking about this company is they do have a little bit of debt. And in the interest paid for the year, that was $1 million. Last year, it was $1.5 million. Now, one of the reasons they did a capital raising was to pay down a bit of that debt. But still, if they didn't have that debt and they weren't paying interest, this company would have been operating cash flow positive by over $1.2 million for financial year 22. So this is one of the reasons I don't like debt, because a lot of companies, particularly small companies, can be really hamstrung by debt. So there's one of the things I do look for is those companies that don't have any debt. And at the end of the financial year, they did have $2.2 million in cash. And one of the reasons they did have that amount of cash was because they actually increased their borrowing by $2.1 million. They also did a share issue. And with that share issue, they did receive about $1.04 million. So there are a few things I'm looking for before I even think about taking a position in Babylon Pump and Power. And that is a significant decrease in their debt and the company becoming operating cash flow and free cash flow positive on a consistent basis. So they don't have to do any more capital raisings unless they do a significant acquisition. But I would prefer this company to grow organically from here, just because of the amount of shares on issue right now. Now, they can go down that share consolidation route, and a lot of companies do that. So I wouldn't be surprised if Babylon Pump and Power go down that road. Now, for the September quarter, this was a good quarter. And this is the reason, the catalyst for me doing this video today, because I thought, well, I was thinking maybe the company should be rewarded with this particular quarter, because receipts of customers 8.1 million, which was a record quarter for this company, and they were operating cash flow positive by $1.16 million for the quarter. So if they can continue this momentum going, that would be a good thing. However, even though they were operating cash flow positive, the cash on hand actually fell from 2.2 million to 2 million. So we need to see these cash levels actually increase. So even though they were operating cash flow positive, the cash on hand actually fell. Now, some of the reasons why cash on hand actually fell was because they did an acquisition. So if they didn't do that acquisition, which amounted to $500,000 for the quarter, cash on hand would have actually increased. They also spent $945,000 on property, plant, and equipment. So if you take away that from the operating cash flow, that shows you this company was actually free cash flow positive by a small amount, about $200,000. They also increased their borrowings or the loans by about $400,000. And the main reason they did that borrowing was probably because of that acquisition. So altogether, cash on hand actually fell. And the next inflection point, or the first inflection point I want to see from this company, is the company increasing their cash on hand through increasing their operating cash flow, increasing their free cash flow, and that all will go down to the bottom line, to the cash on hand. Now, Babylon does have debt, and in section 7 of their Appendix 4C is probably one of the most important sections of these type of companies. The amount of debt this company has, the drawdown of any debt. So decreasing debt is the one thing I want to see from this company. And also the facilities. What interest rates are they paying? Now, the interest rates they are paying are not too high. I have seen some companies have finance facilities with interest rates above 20%. But for Babylon Pump and Power, they do have some facilities with National Australia Bank, and they're only fairly small interest rates, 5.72%, 4.54%, 4.29%. They also have a Toyota Finance Asset Finance facility at 4.13%. But the main thing here is they have $9.6 million of debt. They also have $3.1 million of unused financing facilities. So if they are starting to run out of cash, so if those cash levels fall to say 500,000, they at least have some unused facilities that they can use, so they don't aren't in trouble of running out of cash. And that would be the biggest concern for this company moving forward. Now onto the receipts history for Babylon, going back to 2018. And receipts have grown, well, actually, I won't say consistently. They have grown consistently if you take away the 3 quarters in the middle here. And for some reason, and I don't know why, because I went back to the March quarter 2021, there was no explanation why there was such a significant decrease in receipts over those 3 or 4 quarters. I could have just missed it, but receipts fell from 7.4 million to 2.8 million. Then all of a sudden, in the June quarter 2021, they rose back up to 7.6 million. But just negating or disregarding those 3 quarters where receipts fell, if you look at the past 5 quarters, not including the most recent quarter, you can see receipts just going sideways at around about 7.2 million to 7.6 million. So my main concern with Babylon Pump and Power is over the last 4 quarters was this company was not growing anymore. Receipts were going sideways. And then all of a sudden, in the most recent quarter, receipts increased from 7.3 million to 8.1 million. And this was a record quarter for the company. I'd like to see this momentum moving forward. I'd like to see this company continue to grow their receipts from here over the next few quarters before I get even excited about this company. One thing I love about companies is how they market themselves when they release any sort of financial results. So what I did is I went back to the March quarter of 2021 when they only had $2.8 million of receipts. And then I looked at the previous quarter to that just to see how different the highlights were and what they're focusing on. So in the December quarter of 2020, they were focusing cash receipts. So cash receipts of $9.7 million in the first half of financial year 21. So not the quarter, they were just focusing on the first half, because if you remember the cash receipts history, this is when we saw cash receipts take a fairly big dive. They're also mentioning operating cash flow improvement, unaudited first half financial year 21 revenue. So they're also focusing on revenue. Then we look at that quarter where they had a significant decrease in cash receipts down to 2.8 million. They did not mention cash receipts at all in their highlights. They mentioned strong revenue of $5.8 million, and they were positive EBITDA in the third quarter of financial year 21, and record monthly revenue in March, and strong business momentum, but no mention at all about cash receipts and why cash receipts were so low. They also mention here, well positioned for future growth with cash and facilities of $9 million. So it's really interesting to see what the company focuses on when you just look at the highlight section of the Appendix 4C. So you do have to dig a little bit deeper than just looking at the highlight section. Now let's have a look at the chart for Babylon. This is the weekly chart, 5-year weekly chart, because they did list on the ASX in November 2017. So this company is celebrating, just about to celebrate, or has already celebrated their 5-year anniversary on the ASX. And this is an ugly looking chart. So when they did list on the ASX, the share price was around about 2 cents or so. So at a share price of 2 cents with about 400 million shares on issue, the market cap of this company was less than $10 million, which was lower than it is now, even though the share price has decreased a significant amount. The reason why the valuation now is higher than it was when they listed, even though the share price is significantly lower, is because of the massive amount of capital raisings and the significant increase in shares on issue. Now, probably the high point for Babylon Pump and Power was towards the end of 2020 into the start of 2021. The share price reached a high of 3.8 cents. But ever since that high, that was towards the end of 2020, the share price has been dropping, and it's fallen from 3.8 cents to a current share price of 0.6 cents. Now, the low and the all-time low for this company is actually 0.4 cents. So if you actually bought this company at 0.4 cents, and right now it's 0.6 cents, that's a 50% increase. So again, you can see why, unlike buying any companies with a share price lower than 1 cent, because if you bought this at 0.4 cents, you're already at a 50% return. However, you would have to sell your shares to lock in that return. And that's why there's probably a lot of pip traders just trying to buy and sell. So buy at 0.4, sell at 0.5, or buy at 0.5, sell at 0.6. There's a lot of those pip traders right now in these sort of companies with a share price less than 1 cent. That's all I have for this look at Babylon Pump and Power September quarter, Appendix 4C. If you do have any thoughts about this company, maybe you are a shareholder, I'd love to hear your opinion on the future of this company. Now, if, and this is a big if this company can remain operating cash flow and free cash flow positive, preferably increasing both over the next few quarters and also increasing their revenue and their cash receipts, that would be the time when I start paying a little bit more attention to this company. However, in saying all that, there are still a few red flags moving forward for Babylon, particularly around their debt and the shares on issue. Now, if the share price does take off, say from 0.6 cents to back above 2 cents or so, that would be less of a concern for me because there would be less pip traders at those levels. So those are the main things I'm concerned about Babylon Pump and Power. It's mainly the debt, but there's also the shares on issue. So if you do have any thoughts, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.